We turn to the economy now. All eyes on the Federal Reserve, expected to announce its latest decision on interest rates at the end of a two-day meeting later today. And it comes at a key time in President Trump's trade war, inflation and consumer prices that keep creeping up as well, and the nation's highest unemployment rate in nearly 4 years. NBC's senior business correspondent Christine Romans is in Washington for us this morning. So, Christine, in terms of the size of the cut, or as you called it yesterday, a trim, are we still expecting about a quarter of a percentage point?
Yeah, that's the conventional wisdom here, that the Fed will cut interest rates. It could be more, quite frankly. But look, this is a big day for your money in the nation's capital, because this would be the first rate cut, even if it's a little one. It'll be the first rate cut since late last year. And what's really, really key is what the Fed chief, Jay Powell, says about rate cuts going forward, and their concerns about supporting a labor market, a job market in the U.S. that appears to be weakening a little bit here. They want to make sure they get out ahead of that and don't let the job market weaken too much. You know, we've seen that there have been layoffs creeping up here, and new hiring, especially for people entry-level jobs and people young in their career, that hiring is really slowed. So that's a concern they're watching.
Christine, if we do see this rate trim, where do you think we'll see the biggest impact on spending?
We're already seeing right away mortgage rates are now at a 3-year low, you guys. Mortgage rates have been falling in the market in anticipation of this first rate cut and maybe more after that. Look at that 30-year fixed rate mortgage, guys. That's improved even since yesterday, just above 6.1%. Credit card interest rates, those are tied to the Fed's rate setting. Those could start to drift a little lower. Look at that 20%, though. That's a very dangerous place to be putting a lot of debt. Car loans at 7%, and HELOCs, those home equity lines of credit, those can be very, very valuable if you're trying to do home improvements or consolidate that high interest credit card debt. Those rates will probably start to decline right away as well. So those are the places you'll start to see a little bit of relief in those high borrowing costs. But the most important thing is what the Fed suggests will happen next. There are 2 more meetings this year. Could there even be lower rates ahead? TBD, guys.
All right. All eyes on the Fed. Christine Romans for us there in D.C. Christine, thank you.
Hey, thanks for watching. And don't forget, you can catch the Today Show every morning on NBC, or take Today when you're on the go. Just follow the Today podcast on Apple Podcasts, Spotify, or wherever you listen.